The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday. And it's at 11 o'clock till noon at this very time that you're listening right now. If you're listening right now, you know that this is the time that I'm on. And thank you, Steve, for 2 great hours. And, of course, straight after me being Thursday, I'm sure Larry will get a little more into some of the commodities because there's some very interesting action going on, especially with gold, which was up, but then it was down, and then it was back up again. So we'll be looking at a bunch of things. I had a question in the den wanting to look at I'm using the USO as the root. The question was, would I look at DIG, which is the Pro shares? Folks, anything you want to know about these Pro shares, go to the front page of TFNN, check it out. Now, a whole bunch of things are happening. Tonight you got Ken Shreve's webinar. It just should be a fabulous webinar, just a wonderful purveyor of the technique called the IBD investing technique, which he's developed over the years to use his own, to add his own particular slant and interpretations. And you've got Tom and Daryl will be together a little later on. I think it's the beginning of February, and that should be absolutely a fabulous show. And that is to do with Daryl's wonderful work that he's achieved in putting together his own, I believe it's his own software initiative. He's the one that really put the whole thing together. So diagnostic trading tool. So that should be terrific. You've got newsletters. You've got just a whole bunch of things. You've got the silver giveaway coming up later in January. Hey, this is a very exciting time. It's an exciting time also because when you're looking at the Dow, I've got new leg C. There's a ChapmanWave technique that I call the ChapmanWave falling axe pattern, which it broke out. I'm changing the color. If you're looking at, what can I change it to? Make it blue. They are blue right there and blue again right there. That's a particular technique that I have in my CD introducing the ChapmanWave methodology. But if you're looking at the weekly, it's a V-shaped pattern, but it's more like a cup formation. And these cup formations can be potent, and if you can learn them, if you can learn how to use them, for instance, in the techniques in my opening call, that's my daily service, comes out every day. I start from 6 something or other in the morning. I'm sending out charts. The final chart is at 8:30, somewhere around 8:35. That's my Trader's Corner. In fact, if you have no time at all, you can look at those charts in the evening. The most important one is the Trader's Corner because I give a very quick paragraph summation of what's happening, where we are, what we're looking at. And in fact, what then happens is that I've got a list of, I don't know how many I've got, maybe 16 to 19 bullet points. Not all of them are stocks that were either in long or short, but they are the indexes that are key, the parameters, just 1 or 2 lines, or the positions that we have, why I'm changing the stops or the buy stops. When we've taken profits, took a fabulous 22-point profit yesterday, and so far we've got 3 stocks that are up double-digit percentages. And I'm going to say it right now because this is a perfect time. We added a new one today. Yes, up 3 cents. So 5 out of our 5 longs are up. And we don't have any shorts right now. I shouldn't say that. We have no shorts. And I wanted to... that's right, I took it off. I didn't want any shorts today. I had one which might not have been perfect, but sometimes when you take your profit, you just have to step back and say, don't get excited. Yes, in the ChapmanWave, you want to go with each wiggle of the up and downs. I don't want my subscribers thinking that I'm just an absolutely short-term trader. No, we have positions that we've had on for ages. that are doing very well. Not only that, I would like to add to a couple because they're acting so well in the weekly chart. See, this is what happens when you hand over from the smaller time frame to the larger time frame. It's really important. Now, I was going to show you a couple of chart patterns. Suffice to say, I've shown you one. This is a ChapmanWave falling axe pattern in my CD introducing the ChapmanWave methodology for those just so many people that bought the CD. That'll be that's the falling axe. It's the declining cone, descending cone, or wedge formation, chapter 24, slide 391. And that's where the articulation of the concept starts. It's not just the one slide. There are 470 slides. So, and 20, how many? I've never figured out how many chapters. I think it's 27 or something like that, chapters. So, here we go. So the Dow is, let me run the numbers. In fact, I'll run the numbers at the same time. This is leg C with very strong support in the Dow, 13,469. It's up 59 to 13,570. The MACD is, you remember, if you can learn to use these tools, I'm going to break it once again. I had an email from one of my subscribers for a couple of days saying, if you're that bullish, if you're looking to go long, why didn't you buy the DDM, which is 200% long the Dow? There were a couple of reasons why. First of all, it's at it's at $75. I had other ways of using up the limited resources that I like to have as a portfolio for my subscribers. I mean, that's the way it is. We have stocks that we could short in the 3, 4, 500s. We have stocks that have gone from $1.38 to $1.60. I want both percentage gains. I want all people in all manners of life, from these fund managers who have my service to people who just regular working folks going off in the morning, and they try to get this early as they can. 8:35 is the best I can do. I suppose I could make it earlier, but I just feel comfortable at 8:35. Then they tap in, and before the markets open, they got to know exactly what they want to do and put in the stops or the buy stops. Case closed. So I didn't go for the DDM, even though I said to buy it on a pullback, and it didn't hit that number. Well, I got this message today from the subscriber saying, as you remind people on the radio, use the ChapmanWave as you wish and add it to your toolbox. Remember, I talk about a toolbox. I talk about having the whole discipline of the plethora of different techniques. You listen to us all here. You've got Tom talking about volume. You've got Steve with Steve's candles and other techniques that he uses. You've got Larry's coming up, and Larry talks about the Fibonacci extension. He talks about the Gartleys and the butterflies. You know, there are different techniques. You've got Daryl talking on in his own diagnostic method. He talks about the levels that he looks at when it's overbought, goes to the second derivative. Those are things that are very important. You've got other techniques. When you talk to Dave White, Dave is talking about much longer term. He uses those long, I'm waving my arms here, those long swings to get an extension so that he can get his vector indicator, that he can use his technique at an extreme to get a reading that says to him, volume didn't commit itself to the rally, therefore there should be a pullback. You've got Ken Shreve, who uses the breakouts. He loves the cup and handle formation. He uses it beautifully. I happen to think it's one of the least successful in the ones that I look at, but it's also the way you use it. I've used it successfully before, but he uses it in a different way altogether. And he understands how it pulls back and where it pulls back to. So you've got all these different techniques. Think about it, folks. A lot's going on. So, ChapmanWave, as you wish to add to your toolbox. Given the DIA only in peak B, I bought DDM on the dip yesterday, that's yesterday, and very happy I did, thanks. And I wrote back to say, now you own your system. It is yours, and my work is merely an addendum. Perfect. That is exactly how it should be. Otherwise, you are thinking, what would Basil do each time you place a trade? I don't want that to be. I want it to become yours. I'm just a subsidiary. I'm just the conduit for another little bit of information. This way you have control. I can now go on. This way you have control independently. Good catch. Congrats, Basil. So the way he's got the trade now, he absolutely can lock in a break-even trade or a profit. So let's go on. So the S&P is at 1477, up 499. Now, what does that do? I'm going to keep deviating. That's the way I'm thinking today. I need to do it. Remember the last time was 1474.51? I said if in January we take out 1474.51 by 1 penny, I have to consider it's not leg G, but it's new leg C to the upside. I will still be conservative. My notation, the monthly is not finished, so other things can happen, but the leg itself has gone to a higher high. Therefore, I'm putting in G/C. I would actually, if it goes even a little higher and closes a little higher, I will then call it C/G, because I have my favorite leaning towards the MACD positive, up 6.04 between the fast-moving average and the slow-moving average. The 0% line actually is up 6, and the 87% level in the 87% level in the monthly chart is still very strong. But the month hasn't even. I mean, we're just half over the month. Anything can happen. So far, it's really positive. It's touching a dashed resistance line. But all I can say is it went to a new recovery high. I can't dismiss it. That's the way it works in my particular technique. It's a very big positive. And I suspect we're going to see money come out of bonds. It's already started. I can just feel it. I can't give you stats. I just don't. I don't have them. I don't have that plethora of information out there. It's there. I'm not going to even hunt for it. My gut feeling says we are going into another phase here, and although I suspect by next week we will have a pretty sharp decline, one of the sharpest declines we've had based on the ChapmanWave methodology that I use, the stalk leg formation. So far, the action's pretty darn good. Okay, so now the S&P is at 1477. The comp index is at 3131. It's up 13. So the Qs, let's go to the Qs for just 1 second while I'm doing this, and then hopefully I will be able, then I'll be able to take calls. Oops, I did not want to do that. That was a big mistake. I'm going right back there. That's fixed the mistake. I keep doing that all the day. What did I want to do? Q. So the Qs have gone to either this is a leg E/C. Whatever it is, I was very constructive on the Qs yesterday for my subscribers. I said that it's holding the 9-period exponential moving average at 66. I think it was 73. Now it's 66.81. And the weekly chart is having a very quick A to B to C, which says you've got to be careful when we finally get a pullback. But in the meantime, I think that the Qs are struggling to move a little higher. 34, 29, 35. This is very important. This is the quickest this corresponds. We've got leg D in the Qs weekly. That's and in the ChapmanWave, the methodology I use says the quicker you go from a low trough, in this case it's the low of the 16th of the low of the week of 16th of November, to a leg D, the quicker you can expect a pullback. But it's a pullback. It's not a smash to the downside. It's just a pullback. And that would say that 65, I would say 65, 95 to 65, 35 will be the key support. Let me run these right through. Gold is up 2, silver's up 13 cents, copper's up 1. That's going to be, crude oil is up 1, copper's up 5. And bonds are down 23. I'll be back with Mike in Lakeland to talk about we'll talk about the S&P. Great. We'll be back. Dow's at 54. Basil Chapman, 877-927-6648. Oh, that was a lot of work there.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Basil Chapman, while during the break, we just had a ton of things, and I'd mentioned STX the other day. It was a question in the den. STX is Seagate Technologies, technology, computers, peripherals, etc. And what I'd said is that if it gets into the ChapmanWave inverted Roman candle high of August in the monthly chart, somewhere around the 30, I remember saying about 33.58 to 33.63 area, that says it's going to not only touch the top of the candle of peak C at 35.71, but it'll make leg D in the monthly chart. That's exactly what it's doing. It's making a cup formation in the weekly chart. We've got to go to Mike right away. Mike in Lakeland, how are you?
Good morning, Basil. Thanks for everything you do. And once again, thank you. I was the fellow that talked to you about iSurge, and you gave me some great advice, and she bounced off of that 480 area, went up to that 510, and Actually, I was able to do it again. So,
that's fantastic. You know, it was on my list. I even have it today for my subscribers.
Yeah.
I said, and I wanted to put the trade on in an option. I ran out of time, and I thought, I'll wait another day. They might pin it to 500. Folks, we're talking about ISRG, which is Intuitive Surgical, which I think has made a hat-trick top in the monthly chart. Hey, fantastic. So you wanted to discuss, yes.
Yeah, I wanted to share with you and ask you a question. We did invest in your CD, which is awesome, and we did tweak it just a little bit on something. I wanted to contribute back to you, but it's presenting a bit of a conflict. In counting the waves, we like to look at the weekly time frame.
Yes.
And I found myself overreading the candles and not necessarily seeing the peaks. So what we did was change it to I wrote a code I can program. So I wrote a code that tracks and align the weekly pivot averages. And then count the peaks from there. And I seem to see the peaks better. I seem to see the patterns better.
Just explain to me what happened. What you're doing is you're just having it notate, giving you the number of those peaks.
Rather than candles, just on the weekly, rather than candles, I wrote a program that is basically like a line on close, but it's not the close of the week. It's the pivot average of the week, the high, low, close divided by 3, and I have it plot that, but it's just a line. And then
so it's a horizontal line?
No. It's it tracks the weekly pivot average.
Oh, okay, I've got it. All right, yep. So all right, And then what happens is that you would get.
So what I do, and then I modified, just rather than looking at candles, I'm just looking at my line, my weekly pivot average, and then I count the peaks. So when I do that, for instance, on the ES, the S&P, I'm looking at a peak. That's why I was surprised that you didn't have any shorts on, and it's not there yet. But I'm counting a peak E, and even on the NQ, I'm actually moving into what could be a peak E, but it's actually showing an unbelievable head and shoulders pattern on the Qs. And they all look really. But I'm counting peak Bs and Es up here, and I'm surprised.
You know what? I'm going to ask you, if you don't mind, could you, at Basil Chapman at tfnn.com, could you send me a chart just so that I can see it?
I'll snap a picture.
That's fantastic. I'd like to look at it. That's number one. Number two is, if you do point and figure charts, it comes to I don't know how that happens, because a point and figure chart is not going to do the same thing.
No. Let
me just finish my sentence. What I wanted to say, that the waveform still seems to work on a point and figure. You'll get your D, your E, or your F. So what I was going to say to you. What I wanted to say to you is that in your particular methodology, what I wanted to look at was whether it still fulfills the requirement of going to a peak of significance, which has to be above D, to give the sell signal.
I'm not using point and figure. I'm using a line.
I'm just saying that when I extrapolate, I say a methodology is robust if you're able to use it in different configurations, and yet it gives you the same results. And in the point and figure, which is really very different, I still tend to get that. That's really what I wanted to say.
Okay.
So I would love if you would send me the chart, because if I can see it, it's going to be very important.
I will send it to you.
Thank you. Because sometimes describing it verbally, I might. Right. It's like when I used to do my cartoons, people would laugh at something and then say they laughed at a particular point, and I would say, "Hey, that wasn't the point I made." But if they laughed, that was all that counted. So I need to know exactly. So so that would be very interesting.
Because I'm seeing I got clearly peak E's and the Q's, maybe a peak E if it goes higher, but it doesn't look good. I'll send it to you, Basil.
Okay, I appreciate it. Thanks so much for calling. I appreciate that. Hey, it's Mike. Did you have another question? No, he's gone. Okay, that's Mike. That was Mike in Lakeland, and we'll be back with Mike in New York straight after this. Basil Chapman, Dow's up 61, S&P's up 6.51. Yes, very interesting session today. I'll be right back.
If If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and the Dow is up 67, S&P is up 7. Interesting session going on right here. Quickly, as we were about to go to our next caller, let me see. Remember I was showing you the patterns yesterday? I showed subscribers, and I spoke to Tom about it, that there's a diagonal line, ChapmanWave inside wedge, a particular technique I use, plus the left side, right side, price, time match, and we needed to see 13,588. It was the 14th, but I've extended it out. I said that it should be today. The 17th would be the latest, and I'm expecting it to at least attempt to get really close to 13,588. Well, it's at 13,500. 7.9. We've got 9 points to go. I don't know if we'll make it, but this is really close, and it looks very nice so far. Let's go to Mike in New York. Hi, Mike. How are you?
How you doing, Basil? I haven't created any programs, but can you take a look at BAM for me?
Okay. Have we looked at this before?
I think a while ago.
Yeah, I remember it, and the reason why I remember it so well is that it's the Brooklyn Academy of Music, a fantastic institution, and I reminded myself that was what I was looking at. So BAM. No, I haven't even got it on the black chart. I know that I typed it up. I thought it was on the white charts. All right, doesn't matter. I've redone it. It didn't take me more than a couple of minutes. Got the monthly chart going from the low of $11.21 back in March of 2009. The low, they called it a generational low. And I must say, this is the most hated bull market I've ever come across in all the years I've been in the market. Brookfield Asset Management trading at $37, up 21 cents. Monthly chart, I'm calling this leg C. I could give it an alternate count as leg F. Everything about it says this is leg C. It's very positive because it says over the coming 2 months there should be higher prices, even if in February there's 3 months. If there's a lower high bar to make peak C, it should still make a leg D up sometime in the spring. And in the weekly chart, I've got it as also the same thing. This is a little more difficult, but this matches very closely everything that I'm looking at in the other charts that have done the same thing, that have gone to brand new leg, which could be an F or a B in the weekly. I'm calling it leg B because the stochastics at 89% and the MACD is very strong. So I like it. I believe it's going to be going higher in the weekly chart. Then we get to the daily, and the daily says you can do anything you want, but it'll be safer to call the last move a peak F. And the stochastic has pulled back to 64.5%, and the MACD is at has made a kind of a wide beta between the 9-period differential and the slow-moving average. So that says to me, I'm just going to make one change here because if I don't do it, I'm going to forget. This is going to be slow, low input, output, style, color, scaling, so it's style. Display update indications. Oops, I can't remember which one it is. I just wanted to get rid of one of these. I had to redo my stochastic there. 52.61 is the fast moving average if you're looking at Tiger TV. Now, do you have I think you had a position in this, didn't you?
Yeah, a relative of mine has one, so.
Okay. I like it very much. If the relative has had it for a while, and from your tone of voice, I suspect it's been a while, I would not be doing anything with it right now. I tell you what I would do. That if it pulls back to, it's at 36.95, if it pulls back to 30, if I'm expecting a pullback next week, and this should be included in the pullback, I'm going to recommend that he doesn't do anything, relative doesn't do anything with it. It's made a ChapmanWave cup and ladle breakout. That's where it doesn't stop at the left side lip, in this case the peak D high of 36.49. It goes right through it, and invariably this particular pattern, I call it the ChapmanWave cup and ladle, doesn't just stop there. As long as it's holding very well and doesn't break too deep into the cup itself and make a kind of a deep handle, this should go to a C and then a D. So I suspect it's got about another 4 weeks of rallying in the weekly chart to make that D, and then it could have a much deeper pullback. And if it goes 4 weeks, that means that even in February, it should continue leg C. So I wouldn't be surprised if this doesn't make a top. I'm talking about a top that it gives back 15, maybe 20%, not until sometime in mid-spring. So that would be April-ish, somewhere around April. And then I think it's going to have a deeper pullback. I wanted to say that if it does, if it can be contained above 36. Let me get the exact number. 35.92 was the low of the 28th. If this doesn't break 36.20 but holds between 36.40 and 36.15, 18, somewhere around there, and then starts to move up, there's a chance that I would suggest that this could be a trading position that's added to it. But I'm not going to do that now. I need to see how this consolidation takes place, but I really do like the weekly and I like the monthly chart. I think it's going higher. I can't give you an upside for it just at the moment because January has not finished, but the previous high was way back in May of 2007 at the exact top of the real estate market, and that was at 43.82. Can it go to 43.82? I don't know. The most important resistance is going to be at 37.19 that's May of 2008. That's really going to be the issue right there, and it broke above it. It's how it closes. It's already gone to 38.03. 38.03? And that's 37.19, yes. So it's already gone above. If it can close above 37.19 on the last day of January, last trading day of January, that would be very positive. I like it. In other words, you can hear that I like it. And I would just say to you, it could take a time out if it pulled back under 35, between 35 and 34.60 over the next 3 weeks. My suspicion is it's got a bit of a consolidation. If we can hold 36.26, that's the 9-period moving average in the weekly, and then start moving higher, it'll start trying to go to leg C. So I hope that helps you.
Okay. Yep. Thank you very much.
Thank you very much for calling, and congratulations to your relative holding this. So, folks, let's go through this. The first question of the den was the USO. I'm using the USO because, in fact, it tracks, it's called the United States Oil Fund ETF, tracks oil pretty well. I mean, oil trades overnight, so this doesn't, so that's what I'm saying right now. Now, this is really important. The leg that I'm looking at now, there was I had a funny kind of notation. I try to do it as conservatively as possible. So I called this a potential instant restart, the high of the 26th of December at 33.23. But the MACD is strong. The stochastic oil is just dipping down a little bit, is at 89%. And the on-balance volume, A, B, C, D, E, is in leg E. A, B, C, D, EF, in leg F, but it's moving very nicely to the upside. I suspect that the USO, like the general market, like the SPY and so many of the others in leg C, IWM in leg C, no, IWM is in leg D, it's a little ahead of the game. The Dow's the one that's behind a little bit, and I suspect that we're going into next week, and next week is where you've got to be a little careful. So the question was on there, if I can find it, I can't remember now what the 222, the double was. I'll get it right now. Double was question dig. So dig. So if dig is in the same thing, this is leg C. Oh, wait a minute. You always have to do each one separately. So here we go. A. This is. Yeah, I believe that's A. Almost sure it's A. 36, 37. Nope. So that's A right there. So this is A, B, C, D. Just to be safe, I'm going to call this E/A, although there's nothing technically wrong about it, F/B. I like this. I think crude oil is going higher. If it closes above the high, that's the DIG, the 200% Ultra Oil and Gas Pro shares. If it closes above 50.82, the high of the 18th of October, and today's high is 50.45. Yeah, if it closes above that, that'll give me a lot more confidence to say that this is definitely the 90% chance that it's in leg B rather than F. Nothing about it technically has any characteristic of a leg F going to a peak F. And what I would like to do is just to do the price time match. I'm going to this particular candle right there. Okay, let's see if I can do this. There we go. We've got color green. Exactly. Okay, I love it. And let's look at the ChapmanWave inside wedge. I'm going to take it from that bar. All right, that's great. I tell you what would be, if this thing snaps through and closes above 50.82, that's the daily chart. Then the support at 49.06 on the 9-pin moving average on the daily would be really good support. But what it would say, if it closed above it, especially if it closed it over 2 out of 3 sessions, that would be very positive, and would say that the I have to just go back to USO for a second because I've already got that notated. It would say that this leg peak A, peak B, and leg C in the weekly chart can start. It's already started to get into the ugly candle of September of last year. September, the week of the 21st, ugly. 37.02 was the high. 33.96 was the low. That's the candle that's going to be the big challenge. Can it really break above it? So if you're long, stay long. I think it's very good. The doji candle that's forming says if it closes underneath 34.60, the low of the day so far, if it closes under that and then gets right back in and tries to touch the wick, which is at the open of 34.70, and then closes above it, so it takes 2-3 days to do that, that would be very positive. But that also says be careful because you're going to leg D. So this doji, you see this doji? I'm going to circle it right now because this doji is going to act like a magnet. On the downside, the price is going to want to come back, although it's not really a long-legged doji. And if it goes up, the price is going to come right back to the 34.68 level. So far it's good. I would recommend this. If you see leg D starting, take some of your money off. That's the most important thing you can do. Just take some of your money off, and that's going to be very important. So that was that. Then I was asked about the IWM. The IWM is the Russell 2000 ETF. It's in leg D. But look at this price time match on the left to the right. This is like a V-shaped pattern, not even like a cup formation. And look what's happened. You've got a beautiful price. I had already drawn this in some time ago. Look, there's the price. It goes right to the day, and it broke out above it 2 days early. So if you want to learn about these techniques, my CD introducing the ChapmanWave methodology discusses this. This is cup symmetry. This is slide 311. Look at that. You see all these characteristics. Look at the trade that we had on the other day. Now, I'm going to explain. I'm always very frank. I don't feel like I need to. If I make mistakes, I'm really ready to say I made a mistake because everybody makes mistakes. It's just part of the game. I had a buy on TGB, which is Taseko Mines, and we got in at $3.15 on the 3rd of January because everything about it was just beautiful. And there was a left side, right side price time match, an exact plumb line from the left to the right. So what I wanted was to get in, and I said, let's have a stop of 3.05. It's a little tight when you've got such a tiny stock, low price stock. It's just real hard to know where your stops are because I'm making a generic stop for people who are prepared to hold even if it goes down 50% because they love it, and I got people who don't want to take even a 2% loss, and I try to compromise. Now, some people were stopped out 3.05. It's the weirdest thing. Others were not. More were not than were stopped out from what subscribers have told me. So I took it that we officially were out of the trade. I do not like to obfuscate. Out is out. However, I kept on every day for my subscribers, I kept showing where it is and what it's doing and how it's going from leg C, and it kept going up. And what did it do? Look at that beautiful 37 bars to the left. This is TGB. And it took 40 bars to the right. But in fact, it got so close within 1 penny, within 2 pennies of the $3.53 right there at the candle that I was looking at. But the inside wedge, this ChapmanWave inside wedge, which I showed subscribers, that was important. Well, it went to peak D, went to leg D. I said, for those of you who are doing swing trades, this is where you can take either some of your money or all your money off. And then I said to subscribers who still belong, I said, you know what? I'm going to recommend that you put in a stop, and they were stopped out with a very nice profit. However, I said I want you to see how the $3 and what did I say? In fact, it's right here in my notation. I said I want you to see how the low 320s is going to hold. When it went down this morning to $3.25, and now it's bounced to $3.37. I'm not sure if I would get in. I wanted to show you how consistent these patterns are. Look at the pattern. There it is. That's theoretical gold back in when it was at $550 back in back in 2001 from the low going to 2006. And look at the pattern here. Yeah, so what I'm just trying to show you that patterns repeat over and over again. So that's the way I like to do my analysis, using the ChapmanWave methodology, and that's what I'm trying to do here as an educational process. So what we'll do, we've got we're going to be coming back momentarily. I want to go through the bonds, the TLT and bonds and the yields, and I'll be right back straight after this. Basil Chapman and Tiger Technicians out. Dow's up 70, S&P's up 7.5.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, I really didn't want to finish today's session without going to one particular chart. I don't even remember where I was before the break because I've already done about 3 charts. But the XAL, which is the ARCA Airline Index, is breaking out. The previous high of $50.60 in November of 2010. It's making a cup formation, and so far, I shouldn't say breaking out, it has the potential to break out. 49.74 will be the level. If that takes it out, 57.11 is the 200-period exponential in the monthly for the summer. And I remember we discussed this some time ago. I said, the airlines are not your old airlines. There's something very different. They've learned how to squeeze out every single penny from everything else. If you used to look at your ticket, the airline fare was, say, $50, and the taxes were up in the, who knows what the taxes were. Sometimes the taxes were almost double with everything else included. But now I'm not even sure. It's probably triple what's going on with all the fees and fares and taxes, etc. So that's very important. And what's important also is in the weekly chart, I've got this as leg C up. This is just a huge move. And if I showed you, you would not believe that this is the airline index. If I said to you the airline index has gone from, in November it was at 38.41, and today's high is 49.74, you would say, go on, airlines? Yes, airlines. And the IYT is doing the same thing. Obviously it's doing the same thing because of what? Because of the airlines. And the IYT is in leg E to the upside, unless it's, E to the, that's the only way I can count it. E to the upside, and the weekly chart is in a very strong leg. It made a lower low, 85.83. It's either in leg B, or I'm calling it leg B for now. But what's very important is that the transportation, the ETF, the IYT, iShares, 101.60 was the previous high, and today the high is 101.09. We're less than $1 away from what? $1 away from all-time, well, I can't say all-time highs because this doesn't go back, but I could say all-time highs if I go back to my TRAN. We're about to run out of time, I know that. So TRAN, there it is. Oh, look at that. Beautiful left side, right side price time match. I used the high. Yeah, and that broke out. It broke out 2 months early, 3 months early. And it's in leg B in the monthly chart. Hey, folks, this is very positive. I like what I see. I know that I'm calling for some kind of a pretty sharp pullback in I think it's probably Monday's a holiday, Martin Luther King Day. So I would say that the earliest I can get it now, based on my ChapmanWave methodology, is so this is an all-time high. Let me just squeeze that close because I want to go all the way back. Yes, this is an all-time high in the transportation index. The Dow has not made an all-time high. I'm not a big fan of the Dow theory. I know that over the years, not for a long time, but back in the 80s and 90s, whenever I heard whoever it was who's the expert on the Dow theory, whenever I heard Dow theory confirmation, I always thought, just as I'm getting a sell signal. So, what can I say? But if this is only leg B, we can't make a top in the monthly chart of the transportation index. If February is a lower high bar, that makes peak F. If March is a leg C, it means that you can't get a peak D until April. That means you can't get a peak C. Then you can't get a leg D until May, and you can't get a peak D until June. That says the transportation average should keep going for a while. Wow. Hey, that's a good way to end the day. Folks, stay tuned to Larry Pesavento. I'm sure he's going to have a ton to say, especially with the action in gold and others. I don't want to put words in his mouth, but that's just my guess. Fabulous technician, and you've got great technicians all the way through. Don't forget Ken Shreve's workshop tonight. I'll be back tomorrow. Have a fantastic day. Signing off. Thanks, Al, for keeping me on track. My wonderful.